All right, welcome everyone. I think you probably missed my voice. It's been over a week. I'm now in Japan. That's one difference, and so I just want to get into a few things that I think are gonna help you guys, and a couple positions and trades I think you'll like to see about. The last video we did, we talked about different software application names. We had Cloudflare, we had Snowflake, big pops in that sector was leading, and the entire sector was going up. And this is a kind of a, I guess, finicky, tricky market, and it's a rotational market. Now, weeks and weeks and weeks ago, or months ago, actually, not that long ago, I shared with you the overall positions, not just in the newsletter, but also what we do in J-Person Asset Management and my managed fund. So one of the trades that we had was Alibaba, and I was very forthright. And if you guys recall, I said, listen, this thing's got the beginnings of a bull market. It had not the what most people look for is higher highs and higher lows, but this had higher lows. And then finally, we got the big mega breakout, and this is the weekly chart here. So let's get back and revisit this because many of you, as you know, we took profits on that trade. I mean, we were long in the basing action somewhere around the 72 area in here, and we dumped the trade as it and scaled out. Now, I didn't sell the exact high, but we used a factor of percentage gain to liquidate some positions, and as the higher the market went, the balance of the trade, we used stops and trailing stops, and that functioned us to get out of the entire position. So what I'm suggesting now is while we were getting out, the media and a lot of people were talking about, oh, China, they lowered interest rates and they came through with a financing package to help stave off a depreciating economy in China, and this was going to be beneficial. And so every one of the brothers and sisters started to buy between 111 and, I don't know, maybe 118 up here, 117. Someone I'm sure bought the high tick up there. Now the market's pulling back, and so what do you think is going to happen? People that bought with the hype in the media, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days of this choppy range in here. I'm not going to say people bought the low dip, and I'm not going to say people bought the high rip. I'm going to say people probably bought in the average price around 110. So the standard mode of operation that some people would probably use is now it's going to be fear, and they're going to get out because they made a mistake, or a percentage loss always does rip into people's pocketbooks. A good reason to get out of a trade. So my feeling is, and looking technically, we do have a gap in the market, and it's not quite gotten down there into that gap zone. There's also another gap down in here. I mean, there's certainly stronger support down in 85, which would be a disaster to see the market pull all the way back down there. And I don't think that's going to happen, but I do think somewhere between 92 and 98. So what I would recommend for those that have enough capital to trade a stock like this, which is over $100, it's a $100 stock, right? Is to scale in 50-50 and look around 98 and change, 98.50 or so, and then look and hope that the market comes back at around the 92 and change. And then stop loss, your average right there, if you think about it, is around $95. What would be a reasonable stop underneath that? Like maybe 88, somewhere maybe 86 on a stop closing basis. Another thing you can do is look for 60-minute buy signals as we get into the dip. But if you're going into portfolio management, I think just using this type of strategy to buy a deeper pullback, I think there's going to be a lot of institutional investors looking for the deeper pullback to come in and get long the market. Now let's take a look at other names, the three top names that people look at when it comes to China-related names. JD.com, that was also a big one in the news because they raised capital and did something that we see a lot of U.S. companies do by selling notes, convertible notes, and that is one trade that kind of got people away from this stock, and it pulled back, and then all of a sudden it too ripped. Now JD is a little interesting because it probably didn't get as much traction in the news as the next one I'm going to talk about, but I think this one might have a deeper pullback, probably around 30 to 32 zone. And that's, I would really want to see a deeper pullback in this regards. Now, some people look for old swing highs to act, which was once resistance, will turn into new support. But with these gaps down in here and the mega volume loss that we see in the J-Person momentum indicator, volume indicator there, I think we're going to see a deeper pullback in JD. So if you want Chinese exposure, I think that you wait for the pullback, and I think it's the right place to be, because I do think that China is going to continue with stimulus. They're just not going to do it all in one day, and they're going to let it work a little while. And so people that bought into this hype, they're probably going to get punished a little bit. Nothing worse that wears on your psyche is being in a losing position, buying a high on a rip, like this particular sector of the market did, China-related stocks, I mean. Nothing works on your psyche than losing money over a longer period of time without any relief. And people make mistakes. They let their guard down and they say, "Ugh, I'm just going to get out of everything." And that flush out, that's what we're looking for. And so the next one that I'm going to come up with is, I never pronounced the name right, but we're just going to use the stock. It's the parent company for Temu, the kind of like the manufacturing of cheaper products that you see throughout the internet and maybe even for sale on Amazon. So PDD has got that, and I mean this is one wildebeest of a I mean it looks like a roller coaster ride actually. And this one I think has got somewhere around 105. It's got that potential. The problem with this particular name is that the Biden administration has put out vibes that they're going to shut down access and censor, because of dumping. That they feel that maybe perhaps their products are getting sold too cheaply on the market. So that had been in the news, and that news might be recirculating now. I just switched back to the main page here, and you can clearly see somewhere around this 113 to that midpoint of that big weekly benchmark. We call that a breakout Marabuzzo candle. I think on the weekly basis, somewhere into that zone between 106 and 110, that's where I'd be intrigued in picking up some long positions. The long-term momentum did not improve. The weekly did, and the daily's clearly in the sell signal. So despite the fact there's like 1,000 stocks and we're coming into earnings, and I get that, and everyone wants to know, what do you think about Netflix earnings results? And I can just clearly say I can't speak on everything in a very short period of time, but I mean, Netflix sold off prior to earnings. Earnings, it's back up $20. It's back to 722. Where's that? That's back to where it was just a couple days ago. So I mean, no harm, no foul. We'll probably have more follow through strength tomorrow. I don't have any exposure in Netflix up here at these levels, so it doesn't concern me. I'm looking for opportunities, and I'm going to share you my thoughts because I know how hard this market is. Not just finicky, it's tricky, and it's definitely treacherous. And there's so many people out there in the internet world selling all kinds of promises of get rich quick and this and that, and it's just a difficult market. My job is what I do is I look for opportunities, and I look for putting the edge in my pocket. That's what I've always taught my investors. That's what I was taught 40 years ago when I worked with George Lane. Now, always be on the edge. The only thing that we can control is our point and click on our mouse, so to speak. We can control the size of positions that we put on, and we can control whether we want to be in or out of the market. But as a trader, you got to take risks, and you got to have defined risk. And that's what I'd like to say, at least at this point, the market is kind of pumped up the whole China strategy, and guess what? They just deflected and they ignore it now that it's not working in that favor. The other thing that I want to talk about is a stock that many of you are familiar with. It's they have about 60,000 or so. I would have to call it registered voters as employees, right? It's called Boeing, right? So bottom line is they just came up and raised some cash. So people thought that they were going to have to cave into the strike and the workers for more pay, and they will eventually obviously get that resolved, right? So we do know that they build planes, they employ people, and they do have government contracts, and they also do something else. They build missiles. So Boeing is not, I don't think, going out of business, and people thought they were going to be completely underwater. But this weekly momentum volume is starting to intrigue me because we had that massive double bottom, lower low in price and better volume. We got a daily buy signal, and I think there's a strong shot that we pull back into like the 150, 148 one more time. I would be a buyer at Boeing into that zone around 152.80. I'd start there, and then maybe if it dropped a buck or two or $2-3 lower, I'd add to it. But I would not want to see the market close back under 145 and change. So 145 on a closing basis would not be good because it never really closed below that 145 level. So if it does make a double bottom and it scrapes the low and is building a bigger base, um, that would be the pullback I would want to buy on Boeing. So we've got a couple things that out there that I think are intriguing. The other one is WULF. Now this is a trade we did some money, made some big money on. Not big relative to this blast off here. We did pretty well on that. And Wolf is Terra Wolf. That is it related to the crypto world, right? It's a crypto related stock. So the other one that I like is in Riot blockchain, RIOT, and we're looking at actively. In fact, we are, just as a disclosure, I already am in a position on Riot, so I don't want to give the impression of pumping and dumping here, right? But what I am looking at doing is adding to this position because I really get excited when I start to see lower prices over a long period of time, and the volume is showing that mega pickup on that type of price pattern where you get that volume on a weekly. Let me expand the chart so you can see this better. See that volume action going up? See the price action going down? It's not a sustainable low. It's showing that maybe people bought high and it's the weak sellers getting out, but no one's really pressing. Short sellers aren't coming in here. I mean, this is when we start to see short sellers coming into the market, when the momentum of the volume starts to depreciate heavily. So when the price is going down and the momentum of the volume is going down, that's not good sign, right? So you need a longer term basing. So maybe people bought it in here and it took time, and it's taken a lot of time. So I think it's a low risk trade. If you can get this thing back in like the 850 region, it's at 920, it's building up. If you can't wait that long, then possibly scale in a little bit. Buy a third of the position here, buy a third about 30 cents lower, and buy a third if it drops down in the 770s. And I wouldn't want to be in that trade either if it closed underneath where all the buying came in. So, I mean, those are just a couple ideas, something that we're looking in. Obviously, we've got some other positions on, and a huge amount of positions in this market. I think overall, the Russell, you guys have seen I've shared before our positions with being exposed to the December 20th expiration. We went and bypassed the November and looking for that January effect, the 218, 230 bull call spreads, been promoting that a long time. And those have paid off, and I think it's going to be a better trade if we get up into the testing in the Russell. More likely, here's what I'm looking at with the Russell, and I'll just share with you real quick here. Go to our advanced decline page that we built, and here's the Russell. I think the advanced decline really accelerated due to the weight of the regional banks. This high up in here, this 230 to the 234, then if we do get a Friday rally or an early week next week rally, follow through rally on the Russell, I'm going to more likely get out of the trade and look for a pullback to reload. And here's one of the main reasons. The volume on the rally is not phenomenal. Number one. Number two, we already look at the JP Mick oscillator, and this went from oversold and now is overbought. And that tells me that maybe it's got one more little leg to the upside before another decline. And if the market holds true to its characteristics of being tricky and treacherous and finicky, then we should see that one last pullback before an end of the year rally in the January effect. That's all I got for right now. I hope you found that beneficial. Once again, we could go over a lot of stocks. These are quick videos to help give you a guide into what I see, how I use my tools, and how I use my tools not only in the package that we put together with, or at least are available on Thinkorswim and Genesis and TradeStation, and how I apply them in real trading. Thanks, everybody, and we'll catch you in the next update. And hopefully it'll be a lot sooner than what I did last week. But please forgive me. We're on the road, we're traveling. I'm over in a foreign country. In fact, you're sleeping and I'm working. It's it's only about 3 in the morning. No, 2 in the morning your time, and it's 3 in the afternoon my time. It's Friday already, so I'm coming back from the future by next week or week and a half or so. I'll see you at the next video update. Thanks again, everyone.